Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Wednesday, the EURUSD pair continued to hover around the 1.1645-1648 level. Another consolidation below this area allows for expectations of a continuation of the decline toward 1.1607-1612 support. Given the current level of trader activity, even this zone does not look like a near-term target or an easily achievable task. A consolidation above 1645-1648 would work in favor of the European currency and some growth toward the Fibonacci 38% level at 1.1686. The wave picture on the hourly chart remains straightforward. The last completed upward wave failed to break the peak of the previous wave, while the most recent downward wave broke the previous low. Thus, the trend remains bearish, but the decline in the pair will not be prolonged or strong. But a break of the bearish trend is now required in order to expect a bullish advance. Based on the current chart structure, such a break would occur about the 1.1700 level. On the 4-hour chart, the pair has returned to the 1.1649-1680 level. Another rebound from this area would work in favor of the EU currency and some growth toward the 0% corrective level at 1.1829. A consolidation below 1649-1680 support level would increase the chances of a continuation of the decline toward the next Fibonacci 38% level at 1.1538. A bearish divergence has formed on CCI technical indicator, which allows for expectations of another decline. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair traded on Wednesday around the 1.3437-3470 level, while all trading has been concentrated over the past few weeks. A rebound from this area would work in favor of the US dollar and a modest decline toward the 1.3352-3362 support level. A firm break above 3470 would allow for some growth toward the 1.3526-3539 resistance level. Market activity is currently very weak, and price movement is essentially sideways. The wave structure remains bullish. The most recently completed upward wave broke the previous high, while the latest downward wave broke the previous low by only a few points, which is not enough to signal a trend changed. The news background for the pound has been weak in recent weeks, but the US news background also leaves much to be desired. Bears have been attacking over the past few days, but a break of the bullish trend would occur only below the 1.3403 level. On the 4-hour chart, the pair has returned to the 1.3369-3435 support level. A rebound from this level would once again work in favor of the pound, and a resumption of the growth toward the next Fibonacci level of 127%, 1.3795. A firm break below the 1.3369 would allow traders to expect a reversal in favor of the US dollar and a decline toward the 1.3118, 3140 support level. No emerging divergences are observed today.
That's all for today. See you online soon.